From R.D. Smothers Wealth Management, this is The Retirement.
When you retire, if you want an exciting life, you need a boring investment strategy.
Matters.
If you enter into retirement without a plan for income, you're not retired, you're simply unemployed.
Podcast.
Hey, this is your host, Dale Smothers, and you're listening to the Retirement Matters Podcast. My hope is that you will find the information you need in every single show on how to do one of the three things: either saving more money more efficiently, planning better for your future where you can live in retirement worry-free, or my favorite, how you can live a happy and fulfilled life in this life you have been given. We know that your time is valuable and we appreciate you spending it listening to this episode of the Retirement Matters Podcast. On this episode of the Retirement Matters Podcast, we will discuss what's going on in the Middle East, why the stock market has been in a little bit of a sell-off, and at the very least, it's been emotional. And then we're going to discuss some things that you need to be doing in your retirement account, whether you are close to retirement or far away. This is a very information-packed show, and I hope you find something valuable that you can take back to your own portfolio. Enjoy this week's episode of the Retirement Matters Podcast. Good morning to you. I hope you're doing well and you're ready to start discussing all things retirement matters. The market is a crazy place right now, and if you have money in your 401k, your IRA, or maybe you are in CDs and you just want to know what you should be doing, we're going to discuss that today. We're going to discuss some moves that you could be making depending on where you are in your retirement journey, and we're going to really put this into a timely perspective. So if you're listening to this on a podcast, maybe it's a week or two later, could be months later. I've got to preempt this show with the fact that the Strait of Hormuz is still closed. And as of the recording of this show and the airing of this show live on Saturday, the Saturday right after Good Friday 2026, this is April the 4th, 2026, the first time this airs live, I am looking at a market that has been very emotional, and most of the emotion stems from the price of oil, how it will impact inflation, how it will impact the labor market. We're going to discuss all of this today, and my hope is to be able to unpack it for you first and then tell you some things that you can do to make sure you're okay as we come through this, and hopefully on the back end of this conflict, you see that your account is in a good place to take advantage of the opportunities that present themselves. You heard me right. There are opportunities, and we're going to discuss those on this show. Now, before we get there, this is the week that we celebrate the resurrection of our Lord and Savior Jesus Christ this past Friday, Good Friday, getting into Easter this Sunday. And with that, let's just go to our Pause for Positivity. And we're going to discuss three things quickly in this Pause for Positivity. I want to encourage you to be patient in seasons where you may find yourself in the dark. I want to encourage you to be contagious around those that you are impacting every single day. And I want to encourage you to be thankful for the time that we live in. And we're going to discuss this with a couple of real quick stories. I don't have a ton of time to spend on this, but this week being Easter weekend, what more is there to be positive about besides the fact that death, hell, and the grave were conquered with this Son of God coming to earth, dying, being buried, and raising again. We believe this to be true, celebrating this Easter season. And so in that light, I want you to think about the risen Savior being put in the ground for 3 days, and how that particular season, no doubt, did not feel as if he was a conqueror. But shortly after, as he rose from the grave, he had conquered death, hell, and the grave, and essentially defeated sin. Sin died on the cross. This is what we believe as Christians. Sin died on the cross. It was defeated there at Calvary. And then it was a battle in hell over the souls, over the keys to the kingdom. And then there was a victorious resurrection. We know this to be true as the gospel, but sometimes in our own life, we fail to be patient in those seasons where it seems as if maybe we have not yet been listed or labeled as a conqueror in our own minds or in the minds of our friends, our family, our relatives. And it reminds me of a Pause for Positivity we did probably 2 years ago about a friend of mine who is an advisor on the West Coast of the United States. He takes pictures and he develops these pictures on his own in a dark room. And he was telling me one day, he was showing me some pictures, beautiful, beautiful pictures that he had taken. And he was showing me these pictures and saying there is a specific process to develop pictures in this dark room. And if they are exposed to the light too quickly, it will destroy the picture. And it made me think about this. And we did a Pause for Positivity on this. If this sounds familiar, you've listened to the show for very long, you've heard me talk about sometimes we are put in the dark room to develop into the beautiful creation we were designed to be. So if you find yourself there during this time, be patient. Be patient. And even during that time, I want to encourage you to be contagious. What does that mean? Well, I'll explain this to you the same way I explain it to my young men and women that I coach. I'm a big sports junkie, and in my spare time, which I have very little of, but I do my best to carve out some time to give back to these young men and women who will one day be men and women. And these young, 6 to 10-year-olds that we are talking to on a regular basis, I'm constantly trying to preach to them. Encourage your friends, encourage your teammates, be there to cheer them on, be their biggest fan, because there's going to come a time where they are going to be yours. And that just builds that team mentality, that camaraderie. And as we're doing this in our most recent flag football practice, there was an older student who came in, and he was a little bit late to practice. And when he showed up, he began to cheer on his teammates. And it was as if someone had flipped a switch, and every single teammate on that team was now cheering on their other teammate because one individual came in. And that became contagious. That attitude, that positive reinforcement became a contagious thing across the entire team. You see, we have the ability to impact people, and we've got to realize that we are contagious. Our good attitude or our bad attitude, our positive outlook or our negative outlook is a contagious thing in the group that we are in, and it's up to us to be contagious in a good way. So when I say be contagious, what I mean is I want you to come into a situation with a positive attitude, with a positive reinforcement that then spreads across the entire group that you are around. And if we do this together, we can make this world a better place. So let's challenge each other this week. Be patient, be contagious. And lastly, I want to talk to you about being thankful. We all know that we should be thankful. There's even a holiday around Thanksgiving. At the same time, it's easy to look at the time we live in and think, man, these are tough times as a human race. But when you zoom out and look at it from a big picture, what other time would you have rather lived in when it comes to the ease of life, when it comes to the immediacy of information or the ability to do the things that we all do on a daily basis? We may glorify the 50s and 60s, and I'm a big fan of that. I love watching Mayberry and, thinking, man, I would love to live there on the Andy Griffith Show. Time seems simple. Life was more laid back, but there were challenges. And a lot of times we can gloss over those challenges. And yesterday, I actually stumbled on something that made me think about this. It was a This Day in History post that said in 1960, on April the 3rd, the Pony Express was established. This was if you're not familiar with the Pony Express, the purpose of the Pony Express was to quickly, using air quotes, quickly deliver mail between the East Coast and the West Coast. Designed to take mail from Missouri to California through a series of different trails with 400 different horses and 1,900 miles of territory traversed. And it was a revolutionary breakthrough because it did it in 10 days. 10 days. And today, we have sometimes within the hour delivery of our groceries that we order or just a random item that we pick up from Amazon. This is pretty incredible. The times we live in are revolutionary. And with that, we can do some pretty great things. So this week, let's forget about all the negative news that we hear, and let's just be thankful for what we have at our fingertips. Again, be patient, be contagious, and be thankful. And together, if we do that this week, we will find an opportunity to make someone's day a little brighter. All right, we're going to take a quick break. There's our pause for positivity. A little bit different than normal, but I did want to bring out 2 or 3 things this week. And again, happy Easter to you and your family. Let's take a quick break, reset, and come back to discuss what's going on in the market. We're going to discuss it from a standpoint of opportunity and how you can take advantage of these opportunities along the way. Don't go anywhere. We're coming back with more Retirement Matters right after this.
You're listening to the Retirement Matters Show with Dale Smothers. Dale is the founder and president of R.D. Smothers Wealth Management. We specialize in building retirement plans that allow you to walk away from the worry of running out of money. If you'd like to chat with a member of our team, you can do so absolutely free by calling 270-600-PLAN. That's 270-600-PLAN. Visit us online at rdswealth.com and be sure to sign up for our free weekly newsletter.
All right, welcome back to the show. Let's get into the market movement that we've seen over the last couple of weeks. Really, I think we could probably go back about 4 weeks where we heard this rumor that we may be going to war with Iran. And sure enough, in short order, we had started a bombing campaign over in the Middle East. Quickly after that, Iran retaliated with bombing multiple countries in its close vicinity. And the entire Middle East seemed to be getting pulled into a conflict, which was brewing into a war quicker than we could have imagined. Shortly after, we heard that the Strait of Hormuz was closed. And when they closed the Strait of Hormuz, this is a narrow strip of waterway that Iran controls. And they started to essentially blockade any ships from passing through this strait. When this took place, a lot of oil-carrying vessels were unable to pass. And for that reason, supply of the oil was hindered. When supply is hindered, prices go higher. We've seen the price of oil now get over $100 a barrel and maintain levels at over $100 a barrel for about a week and a half, a little bit of a dip there, but mostly it's been at 100 or more per barrel. What does that mean for you? Well, that is probably going to mean $4 per gallon of gasoline. And diesel has went to over $5 a gallon. And this is where it becomes a almost unsustainable path for the American economy. Many experts began to discuss how that this was going to cause a tremendous amount of inflation. And this inflation discussion then bled over into the Federal Reserve, saying that if inflation does in fact become something of even a possibility, that they may consider a rate hike. And for the average consumer, a rate hike means that it becomes more expensive to borrow money, either for an automobile or a home or just a general loan. It becomes more expensive. And this does not help the consumer. It means that when debt becomes more expensive, oftentimes it means that you don't have as much at the end of the month. And for companies, when their debt becomes more expensive, it means that it eats more of their bottom line profit. With bottom line profit being reduced, the stock of that company is often sold. And when the stock of that company is sold, prices fall. So that's where we've seen the stock market pull back from its highs at the end of 2025. However, in the last couple of days, I would say 4 to 5 trading days, we have seen stocks be repurchased. And for that reason, the S&P 500 and other major indexes like the Dow Jones or the NASDAQ have started to come back up closer to their all-time highs. As it stands, most major indexes are between 4 and 6% from their all-time highs. But for the average investor, because of the way that stocks and bonds have been moving in tandem over the last 4 to 5 years, you have seen probably larger than that pullbacks in your retirement accounts. But I want to tell you that that doesn't have to be the case. When we work with clients here at RDS Wealth, we understand one rule, and that is that losses hurt us more than gains help us. As you approach retirement years, specifically past the age of 59 and a half, you have to realize that losses are going to derail your lifestyle much more than a gain may improve your lifestyle. So if you were to think about taking a 10% market hit, can you weather that storm? Well, that's a question that we help you answer. And if you can't, or you don't desire to take those types of hits, then the account can be structured in a way to where you don't have to be exposed to that level of risk. I want you to think about this for a minute, and I want you to put yourself in the shoes of just entering into retirement, and you have taken the trip of a lifetime. Maybe you've taken your trip to Europe that you've always desired, or you've just taken your grandbabies to Disney World. And you walk in and you turn on the news, and the news is saying that the market is in a historic sell-off, as if it were 2008 all over again, that we aren't seeing for the next 10 years any real chance of positive returns in the S&P 500. Is your retirement going to be okay? Are you going to immediately end your vacation? Or is it emotionally going to end for you at that particular moment? Would it be challenging for you to enjoy that same sunset that you just enjoyed the night before? Would it be challenging for you to enjoy the scoop of ice cream sitting on the beach with the loved ones? Would those grandchildren's laughs be as joyful to you? If you have not properly structured your portfolio in a way to eliminate the fear of downward pressure on the market, or to know with confidence that even if the market is down, you are going to be okay. If you've not properly structured your account, there will probably be a sense of panic that comes over you that robs you of the remainder of that vacation. And this is what we want to eliminate for the clients we work with here at RDS Wealth. Now, I'm not here to tell you that this Middle Eastern crisis is going to be another 2008 type scenario. I think we see a relief here rather soon. But what if that thesis is wrong? What if there is a 2 to 3 year period of time where we have no more good days in the market? We've just come off of some pretty historic runs in the stock market. What happens if the stock market stays down? Maybe it doesn't trade down or up. It just stays sideways for 3 years. But you still need to take income. What if it stays sideways for 10 years? You know, there's a period of time called the lost decade, which is where we test your portfolio when we work together. This 2000 to 2010 period of time is a period of time in which we need to put your portfolio to work and see, would it have satisfied the amount of income you need in retirement for the rest of your life? Yes or no? These are questions we help you answer. And this is the way we build portfolios for you when we work together. If you need that reassurance and you would like to understand a little bit more about how we structure this risk-on, risk-off portfolio, we'd be happy to show it to you. 270-600-PLAN. We would show you how this would benefit you along the way. And as we've said many times on this show, living a successful retirement is so much more than just having a good investment plan. You need an income plan. You need a healthcare plan and a tax plan and a legacy plan. But if you have a bad investment plan, it's going to make everything else challenging. So with this, let's work diligently on holistically planning for your retirement. And what you're going to find is that moments like these present opportunities for you to execute. At RD Smothers Wealth Management, we specialize in the retirement income phase. We spend our time working with those clients who are over the age of 59 and a half to be prepared to have the retirement they've always imagined as they enter into retirement with confidence. If you would like us to help you, we're here. 270-600-PLAN or rdswealth.com. Set up a time that's convenient for you. You can navigate these times with confidence. We're going to take a quick break. We're going to go to a section where I rapid fire some things that you should be doing if you're in or approaching retirement income phase. You don't want to miss this section. Don't go anywhere. We're coming back with more Retirement Matters right after a short break.
Thank you for listening to Retirement Matters, presented by R.D. Smothers Wealth Management. If you'd like to speak with us, give us a call at 270-600-PLAN. And if you enjoy the information in this show and would like to hear more, you can access previous shows by searching for the Retirement Matters podcast on the podcast platform of your choice. We also produce a weekly newsletter. Receive it free to your email inbox by signing up online at rdswealth.com.
All right, welcome back to the show. Let's go through 5 minutes of things you should be doing right now in your retirement accounts, especially if you're over the age of 59 and a half and approaching retirement income phase. I promise if you're younger than that, I'm going to get to some things that you need to be doing right now and some places you need to be taking advantage of. But right now, what I would do if I were you in this retirement income phase, I would be looking at your overall portfolio and making sure that you know what you are going to do, what portion of your portfolio you're going to rebalance when we climb out of this small dip that we found ourselves in. When things settle, know what your next steps need to be. If you've pulled back more than you desire, don't make the change right this minute. Get in front of an advisor, discuss what needs to take place, and then as soon as we see a rebound, make those things happen. One of the things that we see a lot of people needing to do as they approach retirement income phase is replacing their bonds that they have with an alternative to their bond funds. Their bond funds are too interest sensitive. And right now, in the modern world, stocks and bonds are moving together. And when everything in your portfolio moves the same direction, it becomes very challenging for you to have any security in that money. So we've got to really consider the stock and bond mix that you have and look at different things. We like to use options on the S&P 500, look at different things that provide you stability in the stock market. The up years should make you prosperous. The down years should not put you in the poorhouse, nor should they put you in the psych ward. They should not make you panic. And if they do, you've built the wrong type of portfolio. It's not your fault. We can help you get out of that. Secondly, you need to be looking at your overall tax plan. We talk a lot about that on this show, where it's not just about investing. It's also about making sure that your taxes are as low as they possibly can be. You need to be looking at your tax plan right now in these lows of the stock market, looking at certain stocks that you hold that may have been hit harder than the overall index. It may make a lot of sense for you to do Roth conversions in these low points. Roth conversions in the dips of the market make the most sense. Make sure that if it is in your plan to do Roth conversions, you are exercising those now. And if you are not for sure whether or not you should be doing Roth conversions, that's when you pick up the phone and give our team a call. 270-600-PLAN. If you're over the age of 59 and a half and you haven't seen a true tax plan for you and understanding what your taxes may be over your lifetime, it's time to do this. And it takes a little bit of time to get that dialed in, but we are confident that we can help save significant tax dollars over your lifetime by doing moves sooner rather than later. Not waiting until the IRS tells you you've got to take money out of your account, but instead making moves now that prosper you and your beneficiaries in years to come. Another thing that you need to be considering, and this will be our last one for the sake of time, if you get close to retirement and you are not taking advantage of what we call tax loss harvesting along your portfolio in your non-qualified accounts, you need to be considering this, especially if you have large capital gains built up in your account. Oftentimes we'll see this with someone who bought a stock many years ago. They are now looking at their overall account. They bought it for very cheap, and now that stock is very expensive. We realize that if we sell that in the wrong type of account, we have to pay tax on it right away. And sometimes that tax can be rather excessive. Now, I'm going to tell you there are ways to get around some of those taxes. And how we do that is by looking at tax loss harvesting to hopefully offset some of those gains with losses. We can help you do this if it makes sense inside of your portfolio. If you give us a call, we'll take a look at the account and tell you whether or not that would make sense for you. 270-600-PLAN, or navigate to our website, rdswealth.com. I've got time for one more quick bonus point here, and it's something you can do right now inside of your portfolio if you know how to. Looking at selling covered calls against blue chip companies, big household name companies that are either trading sideways or may have a downward trajectory in their stock price. This is for a good name that you really, really like, but you just don't know if it's going to continue to grow in the near future. Maybe you sell a short-term covered call against that name, and you generate income from holding the stock itself. You're selling the ability for someone else to buy it from you at a later date, and with that, they have to pay you a premium. That premium can then be put into your pocket as income while you still hold on to the stock. And here's the really neat thing about that. If you structure it correctly, and let's imagine the stock stays pretty much the same price or goes down just a little bit, you still hold the stock. You have collected the premium. And when the contract expires, you still have that stock and they have no right to purchase it from you in the future. And if and when it continues to climb higher, you get all the capital gains along the way. This is a wonderful way to buy blue chip names, sell covered calls, generate the income. Also, here's the thing, you collect the dividend from that stock as well, and your yield goes higher while the stock stays still. This is a beautiful way to play a down market or a sideways market for those in income phase. We can help you do these things. 270-600-PLAN. We'd be happy to chat with you about any of these strategies we just discussed or anything else that's on your mind around tax planning, legacy planning, healthcare planning, Social Security claiming, Medicare, all of these things. We will help you if you just pick up the phone and call 270-600-PLAN or navigate to our website, rdswealth.com. We know there are a lot of people right now wanting to have discussions around their retirement accounts, more so now than maybe 6 months ago, because things are getting a little bit less certain. If you need certainty in your plan, we're here to help you build the plan and then navigate that plan together. It's what we do every single day, helping retirees retire with confidence and retire the way they desire. I want to take a 30-second break here, reset, and when we come back, we're going to give you just a few quick pointers. If you are farther than 10 years away from retirement, maybe your portfolio needs to be a little bit more aggressive. Maybe you're sitting in cash right now and just want to get started. We're going to discuss some things with you that you need to be paying attention to. Don't go anywhere. We're coming back with more Retirement Matters right after this.
You're listening to the Retirement Matters Show with Dale Smothers. Dale is the founder and president of R.D. Smothers Wealth Management. We specialize in building retirement plans that allow you to walk away from the worry of running out of money. If you'd like to chat with a member of our team, you can do so absolutely free by calling 270-600-PLAN. That's 270-600-PLAN. Visit us online at rdswealth.com and be sure to sign up for our free weekly newsletter.
All right, welcome back to the show. We are actually wrapping up the show as we come out of this break, and I apologize for the length of time that it took us to really talk to those who are close to retirement income phase. If you are not yet into retirement income phase, you should be looking at some things right now. Number one, you need to be looking at opportunities in the tech sector. We have a lot of names that have been sold off, and they are trading at some of their lowest multiples in decades. Really be focusing in on those things. Also, do not allow money to sit idle and continue to dollar cost average into the market. Should you put all of your money into the market right now? Probably not. But what I would recommend is to consistently stair step into the market with equal distributions month after month until you get to the amount of money that you wanted to invest in the market as a whole. And I would continue to invest in the great companies of the United States of America. I would stay away from bonds if you're not close to retirement, and I would go all into the stock market with the money that I want to go to work. Let it set. Don't interrupt compound interest. Let it do its work, and your money will grow as you sleep. This is the beautiful thing about owning appreciating assets. So there's my 2 cents to those who are growing their money in the stock market. If you are close to retirement, we need to talk sooner rather than later. Our phones are always open. 270-600-PLAN. Navigate to our website, rdswealth.com. Set up a time to talk today. Until we talk again, whether it's right here on this same station or maybe it's in one of our offices, have a wonderful Easter weekend, and always remember, save money, plan well, and live happy in retirement. God bless.
Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. R.D. Smothers Wealth Management is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by R.D. Smothers Wealth Management.